There's a property debate raging at present. Is the future for property bright, or is the bubble about to burst? Now, obviously, if you're considering investing in property or you're about to buy a home, it would be good to know who's right. Hi, I'm Michael Yardney, and in this market update, I'm going to share with you 7 reasons why the property market won't crash in the near future. Of course, after a number of boom years, we've entered a flat period in the property cycle. But what's unusual this time round is that currently every state is in the slump stage of its property cycle. And the trouble is that the negative media surrounding this is spooking many inexperienced investors. Look, I've heard many theories as to why the property bubble is going to burst. Some doomsayers are predicting a property crash just because house prices have risen too high, they say, and they're now unaffordable. Others suggest we've just taken on too much debt, both personally as a nation. But just because house prices are high or unaffordable to some, doesn't mean we've got a property bubble. Now, before I go on, I want to explain to you, last week when I had my last property update, I actually mentioned that we had sold out of the whole first print run of what every property investor needs to know about finance, tax and the law. Well, the great news is today we got the delivery of the next batch of books. So if you want to get this now best-selling book, what you've got to do is just click on the link below and you'll be able to get a great book about property, but how you run it as a business related to tax, finance and the law, with myself and 3 great co-authors. Order your copy now, and there's actually 3 free bonuses for everyone who gets it. Back to the question at hand, what's going to happen to the property market? To understand what's ahead, let's look at what happened when property markets got ahead of themselves in the past. Look, you may remember Sydney had a terrific property boom between 2001 and February 2004. In fact, it was one of the best property markets, the best performing market, between 96 and 2004, and I guess that was in part helped by the excitement of the Olympic Games. After this boom, the Sydney market corrected. It didn't collapse, it just corrected. And values fell from their peak to trough, in some areas by about 9% or so. And this fall took roughly 23 months to play out. So it didn't just crash. Slowly it went down a bit. Of course, not all parts of Sydney dropped in value. Some areas held their values well. And even in those regions where values fell, property prices didn't plummet. They just gently followed a downward path. But have a look at where Sydney property prices are today. Most properties are worth significantly more than they were at their height, way back at the beginning of 2004. A similar pattern occurred in Brisbane and Perth, where their values peaked in February 2008 after a long boom in both cities, and that actually pushed their prices up much higher than the national averages. Again, property prices didn't collapse. They just sauntered along, allowing fundamentals to get back into alignment. Going back into the previous decade, much happened in the same sort of thing happened in the early 1990s when we experienced that recession we had to have. After a remarkable property boom, I had a great time then in the late 80s, interest rates rose to, in some cases, up to close to 17%, and the property markets around Australia stalled. But once again, they didn't collapse. They just flatlined for a few years as affordability, as supply and demand, and as other economic fundamentals caught up. The only time Australian property markets dropped dramatically, the values dropped significantly, even though it was for a short time, was after the Second World War and during the Great Depression. In the 1940s, house prices dropped 17% over a 2-year period, but they jumped back quite quickly afterwards. Property values also dropped during the Great Depression when unemployment was high. But times are different today. No one's suggesting Australia's heading for depression. In fact, we're experiencing the opposite. I know it's a sort of 2-tiered boom, but we're having a great economy. That's why talk of a property market collapse is nonsense. So why don't Australian housing markets collapse? Well, some do. Just have a look at the Gold Coast, where values have dropped up to 40% in some cases. But here's why. The Gold Coast is driven more by speculation than by underlying supply and demand fundamentals. The large fall in prices there on the Gold Coast and in many other holiday locations is because there's so much developer stock on the market. And also by the fact that People are selling up their holiday homes, their discretionary homes, especially after the GFC. The point, though, is in general our capital city property markets don't collapse, and the main reason is because they're illiquid. People just don't sell up their homes because interest rates rise or when times get tough. So some people would ask, well, what could cause a property market to collapse? Looking at what happened in the past, both here and overseas, there's a number of factors that could cause the market to collapse. Number one, a depression or a severe recession, but no one's suggesting that's going to happen. In fact, we've got the mother of all mining booms happening. Number two, unemployment. If unemployment gets so high that many people can't afford to keep their homes. Again, this is unlikely to happen in the near future. Number three, really high interest rates to the level that homeowners just can't keep up paying up their mortgages. Hopefully the Reserve Bank's not going to do that. The other thing that could cause property markets to collapse is a huge oversupply of property, and we don't have that at the moment either. So let's go through a number of reasons why the property markets won't collapse. Number one, we have a robust population growth. That's fueled by international immigration. I know not as much as before, but our immigration's still up there, doing better than most other developed nations. Plus, we have a booming natural population growth as well. Number two, we've got a healthy economy, and that's going to continue to perform well. Number three, we've got a sound banking system with reasonable interest rate levels, but we've got tight lending criteria and a really low default rate. Number four, we've got a shortage of properties. Not everywhere, but in most locations there's a bit of a shortage. Number five, there's difficulty getting finance for new developments. So that plus rising construction costs means all new developments are going to be more expensive, and that's going to underpin the value of established homes. Number six, we've actually got healthy levels of household debt. Contrary to what some people say, we're borrowing a bit more, but now we're actually paying it off. Number six, we have healthy levels of household debt. Sure, we borrowed a bit more, but now most Australians are paying it off, and so our household debt isn't out of control. In fact, most of the people who've got the debt are those that can afford to have the debt. What this does is reduce the risk of a house price collapse if interest rates do go up, because most people are ahead of themselves in their mortgages nowadays. Number seven, we've actually got a culture of home ownership. 70% of us own our homes or are paying it off. That's in contrast to overseas. We actually have a high level of equity in our homes as well. Do you know that half the homes have no debt against them at all? So what's ahead? Look, there's no sugarcoating it. Australian house prices are high. But affordability has increased over the last little while because house prices have remained flat and we've started to have some wages growth. Recent research from Rismark shows the average dwelling price to disposable household income ratio has fallen from a peak of 4.7 to 4.2 times now. Yet there's still a large demand for housing. You see, people are still getting married, they're getting divorced, they're changing jobs, they're having babies, they're coming from overseas. And if they can't afford to buy their homes, they're going to rent. And this is forcing up rentals at the moment. So the bottom line is we're now moving into the stabilisation stage of our property cycle, where values may only grow a few percent rather than those high growths we had, so a few percent higher than inflation, but it's a time when investors will be compensated by higher rental returns. It's important to recognise that there's not one Australian housing market. Capital cities and regional housing markets are performing differently, and even within each capital city, the various supply and demand dynamics on different price points and at different geographic locations mean that different sectors of the market are performing differently. Of course, being a buyer's market are going to mean that well-informed investors are going to be able to pick up some great investment opportunities below intrinsic value, but you've got to do your research right and you've got to negotiate wisely. And you know what, when you look back in a couple of years' time, you're going to wonder why you probably didn't buy more properties while everyone else was sitting around waiting for the bubble to burst. I'm going to keep you updated every fortnight with these regular market updates to help you take advantage of our markets. But it's probably appropriate to remind you that in changing times like we're experiencing, no one can quite help you like the independent property strategists at Metropole. Remember, the multi-award winning team at Metropole have got no properties for sale, so their advice is independent and unbiased. If you want to find out a bit more about what's happening in your local market, or what our research suggests is in store for us, why don't you join us at a free property briefing at our offices in Melbourne, Sydney and Brisbane? Just click on the link below and reserve your place. Now, there's so much happening in the property markets currently. I'm not only writing these fortnightly newsletters, but I'm also giving daily short blogs. So I'd like you to click on the My Blog link up top there and subscribe to that. It's a different subscription to this regular newsletter that you're probably getting. And you're going to get my short updates. Look forward to giving you another update like this in 2 weeks' time. In the meantime, have a great week. Make it a great week. This is Michael.